have a total of 4 exemptions. See that? Remember that number. Now, this is the W-4. The W-4 deals with withholding allowances. Right in the middle, it says personal allowances worksheet. Now, we have the word exemptions and we have the word allowances. And what you have to know is allowances has to do with a lot of other things besides the number of people in your house. In addition, this form has 2 pages, which is what most people do not know. Most people only see the bottom. Okay. Most people only see the bottom. Right? This is page 2, which we will talk about later on. So let's start with the top. If you look in your packets, you have a Form W-4. Now, when you look at this W-4, I need everybody to look at, let's see if I'm back on my, turn it around. Turn it around. All right. This part right here. Can somebody please read that for me on your form that's in front of you?
Complete Form W-4 so that your employer can withhold the direct federal income tax from your pay. Consider completing a new Form W-4 each year and when your personal or financial situation changes.
How often?
Each year.
Each year. Your personal situation, what's that? You got married, you got divorced, you had a baby, you got a new job, you started a business. Anytime those things happen, then you need to redo this form. Now, let's start off with the form. Let's go down the form. Line number 1. It says enter 1 for yourself if no one else can claim you. Now, what we have here is a married couple. They have 2 children. One of them is in daycare. Their total income is $75,000, and both of them work. Can y'all remember all of that? Because you're going to need that as we go down this form. Okay. So it says claim 1 for yourself. So A is 1. Number B says you are single and have only 1 job. So that doesn't apply here. You are married, have only 1 job, and your spouse does not work. That doesn't apply. Your wages from your second job or your spouse's wages are $1,500 or less. That doesn't apply, so we enter 0. The next one says, enter 1 for your spouse. Then they got this big word right here that said but. We're going to ignore that but. Because you can enter 1 for your spouse. So enter 1 for your spouse on line C. And what you're going to find is a lot of people that this but is going to throw them off. What IRS does, it gives you something and then it takes it away. Don't let it take away. Okay? So then we have D. D says enter the number of dependents. Do you see the word exemptions? This word is dependents. That's your children. They have 2 dependents. Okay? Enter number 20. That's 2. The next line. Now, what you have to know about this. Now, this is the most that most people will ever enter. Why? They don't have anything else. They don't have a home-based business. So all they know that they can count is this. And so when you, what was that number on the 1040? 4. 4. 1, 2, and 2. That's 4, right? That's as far as they go because they never see this part of the form. Now, the next line, E says, enter 1 if you file as head of household. Will somebody please read this paragraph on their form? Head of household.
Generally, you can claim head of household, file the status of your tax return only if you are unmarried and pay more than 50% of your cost of keeping up a home for yourself and your dependents.
Okay, the big thing she said was only if you're what?
Unmarried.
Only if you're unmarried, that's the biggest portion. Because I see a lot of people, they're married, but they decide that they're a head of household. Sometimes a lot of times it's the woman because she gets to carry kids. But you're either married, you're single, you can file separately, you are head of household, which means you're unmarried, and you have qualified dependents, or you filing as a widow. So, those people you told. All right. So, oops, sorry. So here we go. I'm on F. It says enter one if you have at least $2,000 of child and dependent care expenses. Did I say they have a child in daycare? Does anybody know where you can have daycare and spend less than $2,000 a year? Okay, so they get one. Child tax credit. Now this is the line that really trips people up. So it says, if your total income would be less than $65,000, $100,000 if married, enter 2 for each eligible child. How many children do they have?
2.
They're both under 17. So how many can they enter on that line?
4.
4. Okay. If they had one more child, they would enter what? 6. Okay, so now this is where this comes important. It says, then less 1 if you have 2 to 4 eligible children. So if they had 3 children, they would have entered 6. They would have calculated 6. Then what are they going to subtract from? 1. So this number would be 5. If they have more than 4 children, they're going to subtract 2 from whatever that number is. It's just that simple. Simple math.
That's perfect.
Yes.
So is it 1 per child that you less 1?
No, it's just 1. 1 one time or 2 one time. Got it? Okay. Now, if your income is more than, I have to read it from here because I can't see it there. If your income is between $65,000 and $84,000, you're going to enter 1 for each eligible child. If you're married, it's $100,000 and $119,000. You enter 1 for each eligible child. Why? You went into a higher tax bracket. You pay higher taxes, so now they're decreasing your deductions. If your income is over $119,000, how much child tax credit do you get? 0. 0. All right? Now, line H says, add lines A through G and enter the total here. We have 1 is 2, plus 2 is 4, plus 1 is 5, plus 4 is 9. What did they have on the 1040?
4.
They more than doubled their exemption, their allowances, by reading the form. HR offices do not give the top of this form. They only give them the bottom. They do not give page 2 because they don't understand it. They don't want you to ask any questions. But since how many people actually learned about this form since they came to my income? It's almost 100% in the room. So now let's go on to page 2. Remember that number 9, okay? We're going back again. Here's the 1040. Again, where you have the 4. So you got 4 in your head from the 1040. You got 9 in your head for page 1 of the W4. Okay, this is page 2 of the W4. Page 2 of the W4, you will use this only if you're on a home or if you own a business. So line 1 says, use this worksheet only if you plan to itemize deductions or claim certain credits or adjustments to income. When you enter this form, you're going to use estimates. You don't have to have the actual figures. A good thing to do is if you itemized last year, then look at your tax return. You know you get a new job, you know you got to fill it out. Look at your tax return, so then you have a good figure. 9 times out of 10, you're going to have the same deductions that you had the year before. So you're going to enter itemized deductions. What is that? These include qualifying home interest, charitable contributions, state and local taxes. Now, let's look at this. I'm going to show you 3 taxpayers. All of these taxpayers are married and they have 2 children. They file jointly. That means no one's claiming single and no one's claiming head of household, and they're not filing married, filing separate. They file jointly. So let's look at what happens when you decide how you're going to earn your income. So the first couple, they only have a job. They only have work jobs, and they have deductions of $28,600. And where did that come from? If you look right here, the standard deduction is $12,600. If you look on your form W-4 on page 2, right in the middle, where it says line 2, it says enter $12,600 if you're married, filing, and joint. Those are the standard deductions. You can find them there, and you can find them on page 2 of Form 1040. In addition, I have $16,000, and that's because we use $4,000 for each exemption that they had. So that's where the $16,000. Where you find this $4,000? It's on page 2 of your Form 1040. Okay, so they have a total, if they don't do anything else, of $28,600 in deductions. Their taxable income, $46,400. Now, they decided they need a little more money. What happens when most people decide they need more money? What do? They go get a part-time job, right? So they did that. Part-time job. It added an additional $12,000. Now their income is $87,000. They still get the standard deduction, $28,600. But what happened? They're in a worse state than when they weren't making that money. They owe on that $12,000. So now their taxable income is $58,400. Now here in my econ, what do we advocate that you do? To lower your taxes. What do we advocate? How do we, other than correcting your W-4? Home-based business. All right. So here we go. This couple, they make the same $75,000. In their part-time business, they earn the same $12,000. So they still have taxable income of $87,000 and then deductions of $28,600. So that's their income right there. But because they have their own business, they can write off a portion of their lifestyle. So you heard Josh talk about the mileage, car and truck expenses, 57 cents a mile. That's major. Especially if you drive over 10,000 miles a year, a large portion of that is going to be your business expense. So here, car and truck expenses, they have $8,000. Wow. Okay. Wages. How many of you have children? Can McDonald's hire your child? You can too. Wages to your children, $5,000. You can go up to whatever the standard deduction is for a single person, which on page 2 says $6,300. That figure changes periodically, so know what that figure is. When you hire your children, you have to make sure that the wages you pay them match the work that they do. You have to document it. You have to sign a contract with them. Do all of these things, and you are safe from my former employer, the IRS. Yes.
Do you need a LLC to do that?
No.
What was the question?
Do you
Do you need an
LLC?
LLC in order to do that? But what you do have to do is make sure you have your business income separate from your regular income, and then they need to be paid out of that account into a separate account, and then they spend from that. The clothes you're going to buy, whatever you're going to do anyway, you can use that money to do it. Okay? And, oh, I keep hitting that wrong button. Okay, there we go. So, in all of that, they ended up with $20,000 in additional deductions. So $58,000 minus $20,000. Now we have taxable income of $38,400. So what does couple number 3 know? The couple number 1 and 2 did not know.
Home-based business.
They know somebody in my income. That would be you. Okay? Now, let's see where all these figures go. Now, this particular couple has a home mortgage. Most times when you have, well, it used to be when you had a home mortgage, you would get this statement called Form 1098. But your mortgage company is going to tell you how much of what you paid was interest. If you pay taxes through what they call the escrow account, whatever, that's going to be on that form too. Otherwise, you have a way to find out how much you have in taxes. Okay? So here we go. The mortgage interest is $8,672, taxes $3,546, for a total of $12,218. They tithe, they go to church. All right. So they paid $7,100. It's pretty close to $75,000, right? And then there's charity, which you can take up to $499 an IRS from Bob. So they have total deductions for their Schedule A itemized deductions of $19,817. That's what belongs on line 1. If they have none of this, then you leave it blank. Okay? The $12,600 goes here, and then that's because they're married, filing and joint, and then you subtract the difference, $7,217. Now, let's go back to their home-based business. They made $12,000. They had expenses of $20,000. See it there? $12,000, $20,000. And so the difference, $8,000, goes on line 4. It says add lines 3 and 4, which is going to give you $15,217. Line 6 says enter an estimate of your 2015 non-wage income. That's your interest and dividends. 9 times out of 10, you won't have any, or you don't have an clue of what it is. So just enter 0. So you add these two together, you get $15,217. Line 8 says divide line 7 by 4,000. 15,000 divided by 217 gives you 3 point something. It also says drop any fraction. So you only enter your 3. On page 1 of the W-4, what was our number? 9. 3 plus 9 is 12. They went from 4 exemptions to how many? 12. All right. Now you see this part of the form? This is the bottom half of page 2. And this form is another place where IRS wants to scare you a little bit. And they'll say, if you put anything on this bottom half, then it's going to take away all the deductions that you had in the first place. So that's one place. The next place is right here on Schedule C. Remember we talked about that button where they didn't want you to claim your spouse? That's 2 places. And then the third place is here on your the bottom half of the W-4, the form that you turn in if you don't have an automated system. It says on line 6, additional amount, if any, that you want withheld from your paycheck. Why would you want to give them more money? Okay. And I highlighted this one right here because this box says married but withhold at a higher single rate. The only time you check that box is if you are definitely going to file married, filing separate. Because that's the rate you're going to be paying. It is a higher tax rate. Got it? Okay. Now, this particular form is a training tool. It's to help you recruit. So when you use this form, what you're going to do is to help people bring money back into their household. So look at this. The schedule on the right says over withholding is nothing more than an interest-free loan to the government. Withhold only what you must and invest the rest. This table shows approximately how much your paycheck will increase with each additional allowance you claim on your Form W-4. So they were married and their income falls in this bracket. So that's $63 per allowance. Okay? For 12 allowances at $63, it's $756 a month that they are not paying to IRS. In 12 months, that's $9,000 that they kept where? In their household. Now, they had 4 that they were claiming. This is 12. What's the difference between 4 and 12? 8. Okay. So with 8, they had over $500. How many people are going to love you when you give them additional $500 back into their household? All right. Any questions? Yes.
I had one, so she said she filled out her W-4, and then after she received her check, she had a 0 from paying in taxes on the federal. Is that possible?
Yes.
No.
It's possible.
Like they didn't take any taxes out?
If she had enough allowances, they didn't take any taxes out. Let's say that she wasn't making a whole lot of income. Okay, so they weren't taking a lot out to start with because the amount you take is based on the amount you make to start. So if she had ended up with 12, she wiped it out.
Yeah, it depends upon her tax bracket too, how much she makes and stuff. And if she have enough write-offs in the end of the year, it's gonna match all the exemptions. Plus, if she have kids, all that comes into play.
Okay. I think that kind of scared her when she said, I'm not paying anything, and she think, I'm still gonna owe them. I have to pay something.
Our main goal is to not overpaying our taxes and not have them pay us. You want to zero it out. So she hit right where we want to hit it.
Yes, that's one.
Yeah, she's got.
Was she used to getting a big refund?
Not big, but I think she did good.
She got a refund. She got a refund of all of her money, probably.
Then she's making less than $50,000.
Yes.
Single parent.
Okay.
She's probably filed here at household.
Yeah.
She's probably filed here at household. They do that.
Right.
Shouldn't buy it house.
Okay, I thank you all for your time. Oh, yes?
No one has ever shown me how to do this. I learned.
Mr. Stokes showed you. Look in your back office. He told you the whole tale.
So where is that back? Where will we find it?
Where you find your back office?
No, where will we find where the stuff starts?
It's under documents. Training. It's under training. There's a video. The good part about it, you can read it, and then there are videos.
I have a question about the part-time job. This is all we have in challenge. Okay, the 12,000. But your expenses are more than the 12,000.
All expenses from a part-time job.
Right. You say you made $12,000. Let's say you made that.
You made $5,000 on a part-time job. What expenses are you able to deduct?
The children and everything else, right? If
You were deducting them in the first place without the part-time job.
Okay, that's, okay, gotcha.
Okay?
That's what I'm confused at, because a lot of people like, if you're not making a lot of money and your expenses are exceeding what you're saying.
The only way you can take your expenses off is that you have a home-based business.
I'm trying.
Got it?
Got it.
Okay. Thank you all very much for your time.
She's gonna guide you to the next room. We encourage you to go ahead and place your stuff in the next room. And then you can get coffee that's on the back wall or take a restroom break. We have about 5 minutes before we'll get started in the next room. So, I need to plug the laptop in.
How you doing? I'm great. Hey.
You give him some love up too?
Oh.
You got stingy.
All right.
Please.
You make me feel
How you
special.
doing? Thank you very much for your
Huh? What's wrong?
What's wrong with your nose? It's not, leave it in there.